you know, when you might even have it set up properly, as far as like you might have the documentation in place, such as a trust. But what happens if you don't have that life insurance policy that actually covers the debt upon your death? So you're not actually passing down generational wealth. What you're passing down is generational debt because it's debt still attached to the property. And now you're passing it on to your children once you pass away. So I know you gave a example about like $500,000 on a particular property. Typically, what do you see as far as, burial costs, expenses? What is the average? I know that's kind of like it's specific to the person's needs, but what is the average credit that most people have? Car loans, credit cards, I'm talking about everything. And what would you recommend? What would you recommend, for someone when they take out their life insurance? What is the proper way to actually take this out?
I've seen some debt now, Ronnie. I've seen
Okay.
some, I've seen some things. So of course, all of this is situational. Everybody is different. I would say, especially nowadays, like just the lifestyle of everyone, even as the economy has changed, inflation and everything, like, I've seen people in debt like $300,000, not even including those student loans. You know what I'm saying?
Mm,
So really talking about like high net worth people who have a lot of the money, they create a certain lifestyle, and even as life and things change, they still have that debt there, even if the income changed. Now they're in a situation. So I think it's really depending on that. That's something that we will walk through, like, okay, all of the liabilities you have, the mortgage, the car note. I would say at minimum, typically, even when people don't have any debt, we typically tell them at least have 500,000 worth of life insurance, just because it's like a kind of just good basis to have,
yeah.
even if you don't have anything. And why that's super important too is because while you're young or healthy, you want to protect your insurability. So even if you don't have any kids, if you don't have a house yet and all that stuff, you still have insurable interest for yourself. So I would say at least 500,000 is a good basis to have starting out.